It's only when the tide goes out that you discover who's been swimming naked. And what Buffett means by this is that when times are good in the market, it is very easy to make money. It's only when things go south and the markets come crashing down that we realize who was investing responsibly and who was swimming naked. This all starts from things like profit taking, not being over leveraged, and holding quality assets, maybe even something like bonds. Number 9. Somebody is sitting in the shade today because somebody planted a tree a long time ago. The benefits of a tree, such as shade, shelter, and beauty, are a result of a tiny seed slowly growing into a tree over the course of years and years and years. It's the equivalent of an investment portfolio started a long time ago from something very small and grown into something far greater over time. Number 8. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And all else being equal, you'd rather invest in a quality company, although it may not be showing extreme value, versus a mediocre company that currently looks attractive. Think about it this way. Would you rather have a small piece of a delicious pie or a big piece of a crappy one? Number 7, only buy something that you'd be perfectly happy to hold if the markets shut down for 10 years. Now, when investing in a company, you should always come in with a long-term view. If the stock market were to close down and you were unable to sell your stock for 10 years, how would this company be doing 10 years from now? Would that be okay? Number 6, in the short term, the market is a popularity contest or a voting machine. In the long term, the market is a weighing machine. Now, what Buffett means by this is that the markets can remain irrational over short periods of time, and companies may trade unjustifiably higher or lower. But over time, companies do revert to their mean or to their intrinsic value. So think voting versus weighing. Number 5, and this is one of my favorites. You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. And this is a very powerful quote because the stock market is a very interesting place where the smarter person does not always have the advantage. In fact, a smarter person can often cause more harm to their portfolios by thinking that they know more than they really do. Number 4, a classic. Price is what you pay, value is what you get. And when it comes to investing, price and value are not always the same thing. When investing in a stock, always understand that the price may be above or below what the company is actually worth. Price is what you pay, value is what you get. Number 3, our favorite holding period is forever. And when Buffett invests in a company, it is not for the short term, like a month or a year. The idea behind buying stocks is to gain ownership into a quality business that you can hold for years and years to come. Number 2, be fearful when others are greedy and greedy when others are fearful. The best times to buy stocks are when investors are scared and the share prices are depressed. In other words, when people are selling. And as difficult as it is to not follow the herd and buy into this weakness, this is a strategy that will do you wonders over the years. Number 1, my favorite quote by Warren Buffett. Investing is simple, but not necessarily easy. And believe it or not, the technical part of investing, such as picking stocks and building a diversified portfolio, is actually the easy part. But being able to manage the psychological aspects of investing, such as managing your emotions, being patient, and staying disciplined to your plan, is what makes for a truly great investor. So guys, those are my top 10 favorite quotes by Warren Buffett. Which of these is your favorite? And did I leave any out? Be sure to leave a comment down below, and if you enjoyed the video, feel free to give it a thumbs up. Thank you for watching.